The secret of success is to do the common things uncommonly well. John D. Rockefeller. And my friends, what are the common things? That's going over the charts each and every day following price movement. Let's jump into these charts now. We are currently looking 20 days ahead. Where are the charts? Where are these levels of support? And what might be happening over the next 20 days. Remember, we love to trade off of our weekly chart, and we will look at where we are, what's happening with the S&P, and what we might see occurring in the not too distant future so that we're able to capitalize on support and resistance levels, and of course, what our candlesticks are showing us along with our volume. And of course, as we look at things over the last 2 weeks, we can see where we had several weeks where the market was banging its head at a top and then started rolling over last week. And we see further down movement this week. We see 4 down candles. We just finished drawing the latest down 2-day candle. That's 4 of those for 8 days of down movement. We can see on the half-day chart where things plugged down, popped up a little bit last Wednesday in the morning, then down again, popping up on Monday morning, down again, popping up on Wednesday afternoon. As far as green candles go, we look at the S&P up for the day, swinging back up strongly, 1.07%. Now, as we look at the charts, where things have been going and where we are, we still see a probability of about 70-75% of things going along. We, of course, had a bit of a recovery today. Up around, we closed at the 583.06 is where we are right now. We can see after hours at 582.71. You can see where things are still going. But as we look at where the market closed, that's 582.71. I'm not sure what I said. But anyway, closed at 583.06. We see that our support level right now is at 572. Resistance is at 600. Aggressive entry point is right about where we close. Strict entry around the 572 level, which is where I would be. As far as getting down and touching that, we can see the low for the week, 572.25. Now, we've recovered from that, but that, again, is a current resistance level. We did see things clear up at the end of the day. We did get a green up candle, and we got higher than average volume. I would not be one jumping into that right now. I would want a lot more to happen. And as we back test it, we see there's about a 65-75% accuracy on that. And again, looking at those moves in the past where, of course, what's been happening with the chart. It's been consistently going up, pulling back for a few weeks, popping up again, pulling back for a couple of weeks, popping up again, a week down, popping up again, 4 or 5 weeks down, popping up again. So that is what has happened in the past. And of course, the trend is your friend until the end when it bends. But right now, we still have, as we backtrack and look, we see that the market's pulling back and then moving back up. And we're trying to capture that pull up over the next 20 days when it does that. So keep in mind, and again, I'll publish the grid so that you have it. We do that trade execution summary grid every day that has for you the direction and probability percentage, the support, the resistance, the aggressive entry, strict entry, and the expected move. Now, I will tell you, as we backtrack, we find over and over again that strict entry doesn't win as much, but when you do run it, overall, it is more profitable. So again, not discouraging you at all from practice trading, because remember, we're not a stock calling service. We're an education firm. We're not giving you market advice, asking you to practice these things. I want you to get used to practicing them. Get used to entries and exits. When you feel like you're getting really good with your paper trading, getting bored of just playing on paper, Then, of course, you can go to fractional shares. If you hadn't taken our fractional trading, if you haven't taken our fractional trading class, I'll put it in today's video for you so you'll know what I'm talking about. It's a small dollar amount, but it allows you to actually practice the real thing, jumping in, getting out $100 or so. So that if you do lose even 20%, it's $20. It's not $20,000. It's not $2,000. It's not the kind of stuff that will totally kill your interest in trading. And that's what happens when you lose real money. That's what happens to most people who jump into the market. They jump in on a real easy up move and it all goes great until it doesn't. They think they're a genius because the tide is rising and they're somehow responsible for that, and they're not. So again, let's keep following these charts. Like I said, S&P up 1.07%. The NASDAQ, it's up 1.30%. Again, we can see similar to the S&P right there at average volume. You can see how the volume's been increasing on the half-day chart over the last many days as that average, this black line on all the volumes is the average volume. And you can see how it on the half-day chart has been increasing. So what do we see on the NASDAQ 100, the tech stocks? Long, again, probability percentage, about 65 to 70%. That's not anything I get really excited about. We see support at the 487 level. We're currently at 502 when the market closed. Right now it's at 576. We look at the resistance, 522.44. And again, you don't have to write these things down. If you're a subscriber at chartingwealth.com, we put the trade execution summary grid in the email we send to you every day at the close of the market. So just listen, follow along on the charts, see if you see what I'm talking about. Now, we see the aggressive entry point here is at 502, which is about where we are now. Strict entry point is waiting for things to pull back and jump in somewhere around the 487.24 mark to the 502 mark. And the back test accuracy is 60 to 70%. Again, I don't get excited until I get numbers up around the 75-80% probability of the move and the back test being around the 80% mark. We do have one of those, and I'll get to it in just a minute. That's where we are on our two stock indexes. Let's move on to bonds. They were the only thing that pulled back today, down 0.80%. We're long bonds, 70 to 75%. You can see this latest two-day candle was a green spinning top. Decent volume there. That red volume only means it opened lower than the prior close. We can see where for a day and a half, bonds as far as Heikin-Ashi candlesticks have been going down. We can see where the volume reduced at the end of the day. Look at this. We're already up to average volume this week, and we've only gotten through Wednesday, so lots of volume reaching a higher high. Long, like we said, the probability is 70-75%. Support's at 89.50. Resistance is at 92.79. We're currently at $90.70. Aggressive entry is at $90.68, just 2 cents lower than where we are now. And then the strict entry is at 89.50 to 90.61. And we look at the back check accuracy, we're at about a 70 to 75% accuracy. So that is where we are on bonds. Still long on bonds, even with today's pullback. What about gold? Well, gold is where we get to the 80%. And again, we've been there for a while. Remember us giving the numbers from yesterday. Support is at 65.07. We're currently at 79.62 at the close. We see the resistance is at 270.26. Aggressive entry is round about where we are right now. And the strict entry is down to about 265 up to 266. And as I said earlier, the back test accuracy is right there at 75 to 80%. So gold, still quite bullish. Now, of course, you can see we had 4 days of red down candles, 2 red down candles pushed through the weekly trend line. We can see for the week we've got a small spinning top, nonetheless, hopefully reverting to the mean, and gold will continue to move up, get back up to that high and beyond. And again, keep in mind, we are saying that the resistance is at the 270 mark. Now, again, the 270 mark is what? Right around where it hit up on the high before. So we will keep an eye on that. Now, let's move from gold to our last chart to look at. That is Bitcoin. Bitcoin hammering up 4.23%. We are long, but we are not long and strong. We are long about 60 to 65%. We look at the support. It's at $23. We look at the resistance. It's at $26. We're currently at $25.60 at the close. What do we have here? We have a small red down candle. Don't have any wick there on top. The latest 2-day candle is almost a doji. Again, below that weekly trend line. We can see where on Monday in the morning popped up and hit the trend line on the half-day chart, then dropped below it Monday afternoon and Tuesday morning, and then started moving up on Wednesday, approaching. But again, is it going to push through that? Is it going to go higher? We see where our resistance levels are. Strict entry point is, and again, this is interesting. Strict entry is at 2304 to 24. The aggressive entry is just about where we are right now. We do the back check on it, the back test accuracy. It's only about 60, 65%. So again, going long on Bitcoin, be careful. Would have served you well today to the tune of 4.23%, but will it do you tomorrow? We'll continue to keep an eye on it. That is where we are, folks. So appreciate you being with us. If you're not a subscriber at chartingwealth.com, go there, sign up for free. If, of course, you want to have my latest book, 3-Wave Trading Advantage, and you want to have our 3-part course, Options Made Simple the Charting Wealth Way, you get those as part of your membership over at Patreon. Become a Patreon member at any of the 3 support levels, and you'll get those things and much more. God bless, my friends. All the best from Charting Wealth.